We'll start.
There is a colleague of mine who joined.
Okay.
Indra, can you change your name to Indrajit?
I think he might have used the same link. That's why.
Yes, I typed in Indrajit, but I think it's still taking.
Okay. We don't mind having proxy Mr. Ketan Gaikwad also. Okay. Sir, if okay with you, shall we start?
Yeah, we can start.
Okay. Good afternoon, all the participants, and welcome to this FEDI monthly discussion series. And I know that we have had some break last month. We didn't have it because there were so many other things happening and we had to give it a skip. But we are back with this and hope to continue with this as a regular feature every month going forward. And today, especially, I think it's a very important special day, especially after the successful conclusion and the consensus declaration of the Delhi G20. India is clearly on the world map. As one of the things which struck me is that India for world and world for India. Clearly, it is there on the world map with everybody talking about, praising about, being talked about that engine of global growth contributing 15% to the global GDP. Very, very good time and high time, and the expectations also are very high at this moment. And as a country, no doubt, in the last few years, the kind of work which has been done is commendable. And whatever has happened, obviously, it's a sum total of contribution made by several entities, several individuals, several companies. And one such entity which has been contributing a lot towards this success story is RXIL, Receivable Exchange of India Limited. And just a brief on some of you who may not be familiar with this organization or who may not be knowing about this. It's an entity which was set up in December 2016 for facilitating the financial growth in the country by providing MSMEs the easy access to the credit. And this was also the first entity to receive approval from RBI for setting up and launching India's first trades exchange platform. And today I'm very happy to announce that got with us Mr. Ketan Gaikwad, MD and CEO of RXIL. And a brief introduction, sir. I know that most of the people would be knowing you already, but I won't be doing justice if I don't give them little more insight about your careers and about the journey which you have had. Mr. Gaikwad is a science graduate from Mumbai University with Masters in Management from Symbiosis Institute of Business Management, and also completed an executive leadership program for INSEAD. And he, of course, is a seasoned banker, has held leadership roles in transaction banking in Barclays, Standard Chartered, after starting his career with Bank of Baroda. And welcome to you, sir. Happy to have you today with us for this discussion. And I don't think I'll be able to do justice if I try to explain what RXIL is, what trades is you have treaded this path, gone through this journey. So I'll request you to maybe, before we go into that international trade and import export part, if you can just give us a brief about the journey so far, the key milestones, and maybe if you'd like to share some of your interesting incidents, episodes, we'll be happy to hear that, sir. Over to you.
Thank you, Mr. Ashwani and the FEDI for calling us, for calling RXIL, for the wonderful introduction given by you. Thanks a lot. So you told me to narrate an incident. In fact, the incident is unfolding today. So we've been representing our India at the Innovation Forum for in the G20 forums. So we represented in Calcutta, Bangalore, and Bombay also. Today, in fact, on Friday, we were presenting. Rather, I would say that there is an SME Finance Forum which is happening next week in Bombay. It's a big event. It's a big event by International Financial Corporation. So it's being sponsored by SIDBI, State Bank of India, and many other reputed institutions, along with IFC. So there is a study tour which is being organized. The study tour is basically they'll come to the organizations and understand what exactly you're doing and how it is doing, especially in the field of SME financing, because that's the whole thing is all about partnership at the global partnership at the financial inclusion. So Saturday we got a call from the organization saying that G20, saying that this forum is happening. So there are invitees which are coming. So we will also want the G20 delegates also to come in. So there are G20 delegates, some 15 of them coming from different countries which are coming to our office now. And why I'm saying it's an incident which is unfolding, because the moment we got a mail on Saturday, we started getting calls from the police office, not commissioner, but from the deputy commissioner, from the various police officers, because it comes under, because when this G20 delegates are moving, there's a high security zone. It's a VIP zone, so you will have to take the protocol. So we now in our office now we have, in the morning we had some 15-16 visitors from police department, and various departments are also visiting to see how our office is located, why are they coming. We will have bomb squads. We will have stiffer dogs. What are the food you're providing? What is the agenda? And we'll have metallic detectors down there. So I never knew that it is going to be such a big event. So the G20 event actually undermines the fact about India that India has done so much in the last 3 years from 2021 onwards in the field of innovation and financial inclusion, that now we can rightfully say that India's much, leap, I would say at least 7 to 8 years ahead of the countries, different countries. Earlier, it used to be that we are always catching up, but now it's the other countries which are catching up with India, especially in the field of financial inclusion. And the story about UPIs need not be repeated again and again, but UPI is a big success. So we also represented at the G20 forum. So how this story started. So I would just take you through the entire journey of how this entire story started. So I joined Receivables Exchange India Limited in 2019. Incidentally, I was the third CEO to join in the matter of 2 years. So I joined in 2019. So just to highlight or just to tell the values which are achieving now. When I joined in 2300, when I joined in 2019, the yearly volumes were around 2,300 crores. In 2019-20, we did around discounting of around 2,300 crores. Last year, 2022-23, we did discounting of around 25,000 crores. So you can see the multiple, tenfold increase in the volumes which you have done. That the same thing story remains for the other exchanges also. And this year we are saying we should be crossing around 50,000 crores. And 50,000 crores is not a mean figure. When you talk about 50,000 crores, you're at almost $6 to $7 billion. $6 billion is what we are talking about. So that is what we have achieved. So it would be rightful for us to talk about the trade journey, how it has shaped up, and then we'll take it to the international trade finance journey. So I've also called my colleague Indrajit Samanta to talk much about it when we come to the ITFS story. So I will talk now. I'll just go to my trade finance trades journey of what exactly is trades and how it is, because one innovation leads to another innovation. And the whole innovation, I would say that it's all started from the time the COVID story happened. The digital thing, the digital push actually came into the being. And it has also actually spawned us to think about, what can we do? What more can we do? How can we achieve? So today, it's a matter of pride. You keep on talking that today you don't carry, when you go outside, you don't have to carry anything. You don't have to carry a credit card. You don't have to carry you just carry a mobile, isn't it? So that's what we're looking at. Tomorrow when you talk about trade finance, it should be a seamless digital journey. And that is somewhat we have achieved it in the the trades platform, and that is something which we are aligned trying to achieve. Whether that can be achieved in an international trade, there are many possibilities it will happen, and we are very positive that it will happen, because with a lot of international developments happening in terms of digitization of the documents, there is very much a possibility, and there is a possibility that India might play a lead role over there. I was actually sharing a dinner table with someone, Commerce Secretary, and there were two gentlemen from different regions, I would say different countries. They were saying that India is such a powerful country. Why don't you take up this matter of digitization, e-bill and all, e-bill of lading and all that? To the Commerce Secretary they were talking about. So I never knew that we have reached a level now that the countries are telling us that you are a powerful person on the table, and you have the agenda and you have the right and means to push that agenda. So yeah, so cutting the story short, I think I'll take the presentation.
Thanks a lot for taking us through that journey, and it's really exciting, interesting, and also a lot of encouragement for the people. Few things which I would like to highlight. Probably one, that world has woken up to what India has been doing, and now it's there, and everybody is acknowledging and realizing. And as you said it right, they want India to take the lead and maybe front run all these things. And the journey from 2,300 to 25,000, and now looking 50,000 within reach. It's really something commendable, and I'm sure that a lot of work would have gone behind that. And before we move on to RXIL Global, just one more thing I was wondering about that. Your platform so far has been focusing on MSME and small and medium enterprises. Is there any cutoff? Is there any criteria? If the bigger players for their bills, etc., their things, they want to do something, they are not permitted to come on to this, or how do you filter out? What is the thing?
So can I ask someone to enable me, because I think I've been disabled from screen sharing.
Just a sec. Just a sec.
I think it's come now.
Okay. Yeah, you're the host now.
Can you see my screen?
Yes, we can see that.
If you can repeat that question, what is the question? Sorry.
I just wanted to check it up with you because everywhere we talk about focus is on MSME, rightly so, and this platform is meant for providing easy access at a fair pricing, transparent pricing to MSME. So, what is that? If the other player you have achieved over there, the kind of reach you have got over there, I'm wondering why should it be restricted to MSME? Maybe the bigger players also might find value in this.
Yeah, so basically the platform has been set up with the intention that it focuses on the seller receivables of sellers receivables, which are MSME primarily. So the corporates on the other side are the large corporates. So the seller on this side is non-MSMEs, which is the focus area, because these are the MSMEs, or these are the components, or these are the suppliers in the ecosystem who don't get the payments on time, and that is basically the focus area for the government as such. So we have been, look, from logistical point of view, it doesn't have any this thing that why can't it be for non-MSMEs also. But the government is very keen that right now the focus is on MSMEs, and rightfully so, because the platform has achieved the kind of growth which is achieved. It's being talked about, I think, in the fintech festival also. The government also spoke about threats. So this, at this point of time, the customer, or rather I would say the RBI, does not want to dilute the focus on the MSMEs. But yeah, what we are also trying to do is, we are setting up our own platform, separate platform, where we can focus on the same platform kind of thing, but we can focus on non-MSMEs as well. So that is outside the platform which we're trying to work on it, because that makes a lot easy, because it is when you start a digital journey, so then the corporates are very keen that if I'm doing it for now my MSMEs, why can't you do it for my non-MSMEs also? So that thought process has also provoked us to start another platform which is for non-MSMEs. So that is on the build process now. In another 1 month time, we should be launching it in the beta version. So that is something which we're working on. So that will focus on non-MSMEs, where there can be recourse financing also to the MSMEs, where the buyers don't come on the platform. So that is what it is. So as of now, the restrictions are there only for MSMEs. But who knows? Tomorrow it can be, tomorrow it is possible that non-MSMEs also will be allowed. Because see, look, it is an inevitable scenario that tomorrow the entire transaction will become digital, because of the logistical issue and the other issues which are there and because of the genuineness issues and all that. So here in India, we have an important, important factors which allow us to do the checks also online through GST and other things. So through e-way bill and the checks and all that. So that's why it is very pertinent that the corporates are also thinking that we should have a digital platform for doing the non-payments for the non-MSMEs also. So that is coming across over there. So just to take up,
benefit which I saw from this kind of digital platform which you're bringing in, it's not just providing easy access to credit to the MSME, it's also bringing in other players other than the banks into the finances into it. Disintermediation which is happening because the banks are also more and more looking at not take to hold, basically acquire and then distribute. That is going to be the next phase of the growth journey, I believe. And that's where this kind of infrastructure can be very helpful. Yeah, thank you. Please carry on, sir.
Absolutely. So, so the first stage was all about financing by the financiers. Now, RBI is also looking at securitization of these particular, so the second part, which is the refinancing of this invoices by other platform, by other, by other financiers as of now. It has been open for other financiers on the platform. So maybe I don't see why it should not happen for the other investor class also. So that is something, a reality which will come. Maybe at this point of time, the RBI's thought is that let's start with the other financiers on the platform, and then the second stage would be that you come in as a primary financier, then you also get insurance companies, or you also get mutual funds or you get some other investors to come and invest into the secondary market, where the primary investor just offloads 90% of your transactions. So oft repeated. So since I want to focus more on the international finance part. So this is just a generic thing that 11 crore jobs, MSME contribute to 29%, 45% of exports. The whole issue is all about delayed payments handling, and when the study was carried out, it was found that many of the MSMEs don't get their payment on time. So they always get it after 70 days, despite the existing of the MSME Act. So this was a study carried out. Almost 17% of them write off their 1/5 of the receivables which come, because after their repeated follow-ups, if they don't get the payment, so then either they have a legal course or they write it off over there. So there was a study carried out. There are almost 10.7 lakh crore which is due from large corporates, government institutions, and this was carried out by Global Alliance for Mass Entrepreneurship during the COVID times. This was the outstanding. So this whole delayed payment life cycle is basically the whole cycle is all about telling the people that when you have the delayed payments issue, then you have buyers delay the payments to the MSMEs. Then what happens is that the MSMEs take the loans from financial institutions to supply to the large corporates or the corporates. Then there is always, when they take the loans from the FIs and the big financial institutions, there is always increase in the cost due to higher interest rates. Then there is a delayed deliverables, there, and you have unhappy buyers, and this leads to the increase of the cost. There is a delayed payment again. Then there is a delayed payment for the EMIs or the servicing of the loan. Again, because of that, there is a decrease in the credit ratings for the MSMEs, and there is an increase in the price. So effectively, the delayed payment issue is not only about the delayed payments, but it is all about the issues about the GDP. The increase, there's a negative impact in the GDP. In fact, that when the delayed payments happen, the whole economy suffers. The prices increases, the financial ratings. If the loans are not serviced, the ratings of the MSMEs also go down. Various things. MSME Act came into being. Then there was in 2012 there was an audited statements which was to be which very clearly has to designate how much is the dues from the MSMEs was there. And TREDS platform got set up in 2015 based on the circular which came from RBI. This is the journey from 2008, when the financial sector reforms were suggested, and then the RBI guidelines came in 2014. And 2016, SIDBI and NSE formed a company called as Receivables Exchange India Limited, and then RXIL executed the first transaction in 2017. So what is RXIL? RXIL is nothing but a joint venture company of NSA and SIDBI, with State Bank of India, ICICI Bank, and Yes Bank are primary shareholders. So it's a TREDS platform. So when you talk about TREDS platform, we have the multiple buyers, because there is a mandatory requirement for the buyers to come in on the TREDS platform above 500 crores. You have MSMEs which are below 250 crores classification. As for the MSME, they are on the platform, and we have the financiers which are there on the platform. So you have around 60 financiers, three parties: financier, buyer, and the seller. These are the parties which are there. They have to execute one single agreement with the platform. Then there is a contractual agreement between the buyer and the seller for the goods and services, the invoices are uploaded when the supplies are happening, and there is a counterparty approach. So it is always important that the invoices have to be accepted on the platform, and once the invoices are accepted, it becomes available to the financier to start competitive bidding on it, and the bid has to be accepted. So, it's a price discovery mechanism. It's a marketplace where the corporate discovers the pricing, effective pricing for their receivables over there on the platform. So once the acceptance is done for the pricing, so then the buyer, that the MSME, gets the payment on the next day. So this entire cycle happens within 24 hours. So today, between 9 o'clock today to evening 9 o'clock, if the invoices are uploaded and the invoices are accepted and the invoices are bid for, the MSME gets the payment on the next day, and the buyer gets debited on the due date. So unlike any other mechanism, we have a NACH mandate which is there. So it's an NPCI mechanism on which we work. We have a debit authority from the buyer which we debit on the particular due date. So there are two flows which happen: factoring flow, where the invoices are loaded by the seller and the interest is borne by the seller. The second one is the reverse factoring flow, where the interest is borne by the buyer, and that is where the buyer controls the flow of the payment to the seller. Benefits for the seller. So what we have seen is over a period of time is that this is effectively helping the MSMEs reduce the cost. So this is a without recourse borrowing. So that means the MSME, once he's given the sellers, made the payment to the suppliers, he's completely off the hook. When the financier has already made the payment to the suppliers, the buyer is on the hook, and the MSME is not something where we have the recourse for. It lowers the cost of funds, and there is without recourse borrowing for the MSMEs. So that's the biggest benefit. So just imagine the MSME getting the payment on the third or the fourth day after he supplied the goods, rather than waiting endlessly for the buyer to make the payment. So that increases the velocity of the money for the MSME, and that is actually factoring in the true sense. For the buyer, what we have seen is effectively the cost of the goods. I have given you shown you the effective the way the cost increases. This is the way how the cost gets reduced, and that's what the biggest benefit for the buyer is there. Then we have seen that it strengthened the supplier relationships with the buyers. Financier, this particular transactions involve is a priority sector lending for the financiers. So that's why the financiers are more interested. But at the same time, what we have seen is they get now access to the quality customers, and the cost of acquisition for the financiers is very low. At the same time, the risk of default is very less. Just to throw the figures, if I were to tell you that, look, in the last 5 years, the three platforms have done transactions worth around 1,95,000 crores, and of that 1,95,000 crores, only 500 crores have got defaulted. Of that 500 crores, 320 crores pertain to one large corporate, which has got embroiled into controversy. And the one is 30 crores, which is pertaining to Syntex, whereas the rest 150 crores is pertaining to the other corporates which have got defaulted. So that means, in the true sense, the default is not even 0.1% or less than 0.1%. So from 1,85,000 crores, only hardly 150 crores is something which has got defaulted on the platform. That's why it is very much that has caught the interest of the financiers now. So we have banks having some 13, or some one particular bank has got 43 divisions of discounting, divisions all across India to cater to the various requirements of the MSMEs on the TREDS platform. So why choose TREDS? It is very important that the MSMEs should come on the platform. They get the corporates get payments up to 180 days. State governments also coming, and it's lower cost of funding for the MSMEs, and that leads to the lower cost for the procurement of the buyers. So that is very important. As of now, between the three platforms, as this is, I think, the dated figure, we have got 60,000 MSMEs which are covered, 3,900 buyers. So it's very mandatory that all the corporates about for 500 crores have to get come on the platform. Amount of the invoices which are factored is 1,85,000, and 1,600 cities have been covered. So the TREDS platform is growing in such a way that if you see, there's a cumulative figure of all the three platforms put together. This year we are saying that we should be touching around 1,30,000 crores. Rate of interest is something which is interesting, that where the rate of, at one point of time, for a AA rated corporate or a AAA rated corporate, the rate of interest had gone to even 3.96. If you see over here, the rate had gone even to 3.96 crore, 3.96, below 3.96. That is the rate of financing. But come the repo rate increases from December to March and upwards, the rates have really gone up in sync with the repo rate over there. So I'm just running it, boss, because I want to give more time on the ITFS platform. So this is all about TREDS agenda, that we went live and it was inaugurated, and yeah. So look, looking at the success of what TREDS platform is all about, the government thought, why should we not look at international financing of the trade, and how can we get it easier for MSMEs to get financing on the international trade platform? That's how ITFS platform came into being. And and if we look at the way the factoring has picked up in India, If you look at it, I was just reading a report of at least factoring in India. It talked about India has done factoring to the tune of 9.6, 8.6 billion euros, and that translates into $9.6 billion dollars of factoring which has been done in India. And and this, it said that look, it amounted to 140% growth over the last 1 year, right? And just next to it was written that China has done factoring worth $575 billion. So you can imagine what is happening over here, and rightfully so. Look, ITFS platform, we feel that it's a big infrastructure development. I always tell my team that it's a financial infrastructure which we are building for the MSMEs. Look, the large corporates have international financial centers where they go and get their bills discounted. Large corporates and they go to Singapore, London, and they have the factoring arrangement where they get the bills discounted. But do the MSMEs or the medium corporates have such a kind of facility? No, they do not have that. And that is what we are looking at, envisaging at getting the factoring processes in place in the ITFS platform. And that is the whole idea of starting up the ITFS platform in platform. So now I think I'll hand it over to Indrajit to take over, and Indrajit will take over this ITFS platform, and I'm there for the question answers. Sir, am I running too fast? Because I wanted to run fast on the TREDS platform front, and
yes, I think that's the right thing. And thanks for taking us through this journey, which is really exciting. And now looking at the numbers, I can see what kind of exemplary work which has gone through it, and the numbers only tell you the final result. I'm sure there would have been a lot many ifs and buts and ups and downs which you have encountered for that. Maybe we'll spare some other day for that. Please carry on, Indrajit.
Yes, if I can just get the option to share. Yes.
Can you share, Indrajit?
Yes, I think I have received, just taking time to share. I have received yes. My screen is visible?
Yes.
Great. So we'll talk about ITFS. So RXIL has set up its own subsidiary in the GIFT City, which is called RXIL Global IFSC Limited, and it's a journey that we started back in September 2021, when ITFS platform, the framework of ITFS platform was floated by the regulator in GIFT City, International Financial Services Centers Authority. It is a wholly new perspective as a regulator. It is a unified regulator which is based in GIFT City, and it has the entire control over all the entities which have set up offices in GIFT City. So it is technically it's a special economic zone dedicated to emerge as a global international financial center, just like Dubai and London and Hong Kong and so on and so forth. So the ITFS journey started back in September 2021, and then we developed our platform. We did the UAT testing, and we did our live sandbox testing with the financiers onboarded on the platform, with the exporters and importers, and we did a couple of live transactions. And we are happy to say that in July this year, we finally received the commercial approval, final approval to go commercially live with transactions. So RXIL is one of the 3 platforms that has gone live with the ITFS platform. Now, the ITFS platform primarily has kind of the target to promote and also facilitate financing for all the Indian exporters, and we as a platform are targeting primarily the MSMEs, considering their share of the exports when we talk about both merchandise as well as the services. And we have seen our
Amit,
prime minister.
just sorry to interrupt here. When you say, I was just wondering, on your slide you are showing export target 1 trillion for financial year 27. That's only for the merchandise, I think.
Yes,
Services is another 1 trillion. So
yes, yes,
your universe is goods and services both, not
yes.
restricting to company.
So when we are talking about 2 trillion by FY30, it is 1
FI?
trillion from,
Okay.
yes, when you're talking about 2 trillion by FY30, it is 1 trillion from merchandise and 1 trillion from services. So that
Okay. So
is the target. And if we have to talk about MSMEs, I think MSMEs will play a very huge role in achieving this target. And primarily, if we talk about trade, it will be very the entire growth of the trade will happen primarily on open account, because as on date we see that MSMEs typically look forward for LC based transactions, but then that kind of stunts their growth. So that is what all these possibilities are being kind of put forward by the ITFS platform. Going to the next slide, we see that there is a lot of global trends wherein global corporates are kind of looking forward to set up their manufacturing plants in India. A lot of supply chain shifts happening outside China, and the main interest is in India or Vietnam as a choice. So these global trends are also in favor of India, which will kind of act as tailwinds to boost India's exports. In terms of challenges, when we study, and that what are the typically which restrict the export growth for MSMEs, we find that either it is knowledge or lack of awareness, which the exporters have, that which kind of stops them to deal with certain geographies or certain kind of companies where they have had bad experiences, or they are not receiving adequate financing or support from the financiers. They're not having adequate options, and even if they have options, the options could be highly kind of pricey, which will not be able to give them their margins also. So these are the practical challenges that the MSMEs are facing. Sometimes it is very complicated documentation, or only the collateral based options that are there. So we are targeting as a platform, we are targeting the open account trade that will happen, and wherein the MSME exporters can receive financing on the credibility of their overseas buyers, and that is where the without recourse factoring and with recourse factoring options will come in, and ITFS platform will have to play a crucial role here, with the support, obviously with the support of the regulator. Now, talking about the IFSCA and the ITFS platform, the IFSCA is the Unified Regulator in Gift City. The ITFS platform, as we call it, International Trade Financing Services Platform, it is an electronic platform that has been set up in the Gift City, looking at the success and acceptance of the trades platform, what we have seen in India, and the way it has grown, just like Ketan explained, from 2,300 crores in back in FY19 to 25,500 crores in FY23. Now that is the level of acceptance that we have seen on the trades platform. We are sure that we will be able to kind of make a significant contribution and traction in the ITFS platform as well. So we are already connected to more than 3,000, 4,000 MSMEs. A lot of them are exporters. We are connected to a lot of corporates who are either importing or exporting, and we will be targeting them primarily first as our customers, prospective customers. In terms of outreach, we have developed a number of products, and to expand our outreach to the global financiers, to expand our outreach to the global corporates, we are partnering with our MSMEs who are registered on the platform, to kind of learn about their business, learn about their counterparties, with which they are dealing or they have dealt, to learn more about their business cycles, and how we can finance them, and also interact and get in touch with their counterparties, to kind of bring them on board on the ITFS platform. In terms of financier outreach, we are onboarding all the banks in India, all the financiers, and all the factoring companies in India, as well as the gift city. And we also have, as a mechanism to reach out to all the global factoring companies, we have also taken up a membership of FCI as a partner member, so that we have reach as a platform to all the 400 member factoring companies of FCI. Uh, in terms of products, we are looking at export factoring with and without recourse. Uh, Primarily focusing on without recourse facilities, so that it is very helpful for the MSMEs, wherein they do not have any recourse, and the entire risk is predicated on the credibility of the buyer. And the financier would be able to take a direct call on the buyer, either through their through the insurance cover, or through the corresponding factoring cover, wherein we have a two-factor model under FCI, or through any participating bank or any financial institution providing a credit guarantee. So we have developed three models of without recourse financing, export factoring for the MSMEs. Similarly, we have also developed import factoring models, wherein import factor banks can provide credit protection to any financing bank on the other side. The workflow also is very similar in the way it has been envisaged, uh, in the way it is working for trades. We have the exporter, we have the importer, we have the financier, and we have the financial institution providing credit protection. So the journey, the customer journey will start typically with the importer or the exporter reaching out to the platform with their requirement with respect to either they are importing or exporting, and the platform will collect all the information from that particular participant, and then will study that, analyze that, do all the necessary due diligence, and provide the data points to the financiers who are registered on the platform. The financier then looks into the data points and then comes back with their credit decisioning. Once the decisioning is done with respect to the limits and what is the commercials behind that, the limits are set up on the platform. And once the limits are set up on the platform, then the transaction starts. We have the exporter already onboarded on the platform, all the documentation is done, and then all the shipment documents, wherein we have the invoice, the packing list, the bill of lading, any other inspection certificate, so on and so forth. Everything is uploaded on the platform, and then the limits are already in place. We get a buyer's approval. Either the buyer directly participates on the platform, we get them onboarded, or if the buyer is not onboarded, we have a mechanism to get a acceptance of the buyer, either on the NOA or through any receivables purchase agreement. So we get the buyer's acceptance, and once the buyer's acceptance is there, then the bidding happens on the platform, wherein multiple financiers can typically look at the invoice and do the bidding. The bidding happens, and once there is an acceptance done by the exporter, then the disbursement of the funds are done by the financier. So whatever is the financing percentage and whatever is the rate, financing rate that has been accepted by the uh, exporter in whichever currency, it's being disbursed by the financier on the next day. The platform also keeps a record of all the transactions that is being done, and facilitates the downloads of all the relevant reports and obligations of all the transactions that is being done on the platform. The platform intimates all the relevant participants whenever a transaction is getting factored, and then so that the financier can receive a timely repayment also of the amount from the importer. Whenever the financier is receiving the repayment, again the reconciliation is done, and the balance margin money, whatever is there with the financier, is again remitted back to the exporter. So this is how the entire transaction will take place on the ITFS platform, without kind of disrupting any existing modus operandi of the movement of goods or the movement of documents between the exporter and the importer. In terms of adding value, the ITFS platform, and in this slide we have shown how the ITFS platform will bring together different aspects of trade financing and constituents to kind of allow the financier to seamlessly deliver financing through the ITFS platform, seamlessly do a credit decisioning, and also the exporter to have a very seamless experience of submitting online documents and getting the financing done. So we are bringing credit protection for the financiers, either with respect to import factor or with respect to insurance or any other credit protection. We will be doing the KYC, AML, the anti-money laundering and the sanction checks through our service providers. We'll be providing entity information reports through reputed agencies like Dun& Bradstreet or CRIF or any other, which will help the financier to have an entire profile check of the counterparties who are doing the transaction. The platform will also provide PO verification in certain cases. The platform is also equipped to handle electronic bill of lading and all the facilities surrounding the electronic bill of lading. The platform, just like we are doing on TREDS, the platform will also be able to provide a deduplication check of any, which will kind of ensure or which will restrict any double financing of an invoice. The platform will do all the necessary due diligence, including the sales ledger analysis between the exporter and the importer, and will provide the inputs and the data points to the financier for their quick decisioning. The platform will also will have a module in the system which will allow the financier to track the vessel while bidding on the particular invoice. So on the invoice, based on the details provided in the bill of lading, the platform, the financier will be able to see the location of the vessel directly on the platform, which will also give them added comfort. And also collection services, which we have envisaged that will provide in future with respect to disbursement and collections. We will also talk about one of the sample transactions that we have done as a part of our sandbox while we have submitted all the reports of the transactions to the regulator. So we had one exporter from Calcutta who joined the platform, and then they were looking for a facility for their exports being done to US, wherein their importer wanted some additional shipments, and they were looking for financing. So they reached out to the ITFS platform, and we discussed with one of the financiers who were onboarded on the platform, and that was one of the first transactions that we have taken up for the sandbox testing. So the financier kind of the ITFS platform collected all the information with respect to the counterparty transactions between both the participants, with respect to what is the customer name, address, geography, the turnover in the last 12 months, and what is the expected volume, and a lot of details, and also the sales ledger between both the parties. And then the financier did their own due diligence on that. The financier then went to insurance company to get insurance cover on that particular importer in the US. The financier received the insurance cover from the insurer, and then the financier confirmed that yes, we are good to go ahead with a certain amount of limit. The limits thereafter was loaded on the platform, and then the invoices started flowing. And then when the invoices came along with all the relevant documents on the platform, the financier, the platform checked all the relevant documents. The instruments was uploaded by the exporter with the user ID given to them by the platform, and the financier checked the invoices and then submitted their bidding. The exporter accepted the bidding, and then upon successful acceptance of the bidding, the importer was intimated, and after receiving confirmation from the importer, the financier finally disbursed the amount to the exporter. And on the due date, the financier is kind of waiting to receive the repayment back from the importer. And this is how we have done some of the transactions, both looking at exports from India as well as imports to India. And that's about it. I would love to kind of answer any questions.
Thanks a lot, Indrajit. You have put something which supposedly for an outsider or somebody who's not involved in the transaction can be very complicated, but you are given it a very lucid and simplistic manner. Few things which have come to my mind, and there is one of the question also somebody has asked. Unlike in the trades platform, what we are happening, where maybe the RXIL or trades has got some better control on the funds flow. Over here, RXIL Global has got no say or no hand in the funds flow. It directly happens from financials to the exporter and the other way around, because there is nothing like NSEH or NPCI existing over there. Is that
Right.
correct?
Yes, absolutely, absolutely. I
So
would
in
only
fact,
say that, yes, I would only say that the platform will evolve. It is just the launch of a very transforming, I would say, digital marketplace, and it has been envisaged. So I would say I'd like to have an open mind. So the platform will be able to adapt to anything, and the more transactions we have, the more participants we have, the more kind of requirements we have. I think going forward, it will also help us to evolve. In terms of, we have seen dollar getting settled in Gift City through a blockchain mechanism that has been piloted through a US bank and some pilot participants, financer participants. So there is a lot of opportunity with respect to clearing of foreign currency in Gift City, a lot of opportunity with respect to settlement or disbursement or collections. So the platform will play a major role, and in terms of controlling that as well, but not to start with.
now I can understand once you provide one brick over there, the stack starts building on other things will come in over there, and then
Yes,
we'll have maybe an efficient system. The second
absolutely.
thing which was coming to my mind is you have already done some sandbox transaction. You have got a better good feel of the market with the credit insurance and all those things. How is it fitting in? What's the pricing like? Does it fit in within the overall cap for the cross-border financing for the buyer's credit, supplier's credit, etc., whatever the
Yes.
RBI has got? You
Yes,
have
yes,
been
it is
able to meet that?
definitely. Yes, it is definitely. I would say, including the cost of credit protection as well, because we have seen exporters being exposed to 500 600 basis points above the reference rates at which they have been receiving finance. So I would say the moment the platform brings in multiple financiers from different geographies outside India, and they can kind of start bidding on credible buyers and the invoices towards credible buyers. That is the time that we will see the pricing getting finer and finer. As on date also, the pricing is, I would say, competitive, if not too much, but then somewhat similar to their working capital rates that they are getting. But I will not say that it's very high or something beyond their reach that they can accept. It's comfortably within their limits, which will help them to kind of seamlessly opt for this financing facilities.
Okay. In fact, there is a question on the chat box. I'll just take it up that if it's okay with you, because
Yes,
the question practically is talking since over here there may be some bank has already financed pre-shipment loan, and for the post-shipment the client goes directly onto that platform for the discounting. How
yes,
is bank going to come into that funds flow chain? How will he know? Or is
yes,
it going to be some requirement for the exporter when he go over there? They need to some give an undertaking commitment that funds will
yes.
flow through their banker, designated bank, etc.
Yes,
Is it
as
taken
I
care of?
mentioned, yes, as I mentioned that there will be no change to the flow of documentation or to the flow of funds as per the RBI regulatory guidelines. So in terms where there has been a pre-shipment facility taken by the exporter, there has to be a declaration, and in those cases where they have taken a pre-shipment facility, the funds will be received with the same working capital bank, so that it does not disrupt the regulatory guidelines with respect to exports.
Okay, so all that is taken care of. As you said, for the documents also, there is no change in the flow of the documents. It
So the
continues.
documents also will move only with the AD banks, and it will go through the original bankers. If not, if it is another bank which is financing on the platform is an AD bank and they have the condition, So we have to keep in mind that we will not deviate the existing regulatory framework. It has to move through a authorized dealer bank in India.
I won't be surprised. Maybe the existing regulatory framework starts realigning itself to come in sync with whatever are the requirements of these kind of platforms things, because they are making the life easier for the people.
Yes.
It's going to be the other way around.
Yes, absolutely. We have already seen a lot of changes to facilitate rupee trading, and then making internationalizing the rupee. So I think there are continuous efforts from the government, both in India and the gift city, to kind of promote trade from both sides.
And I'm just picking up most of the things you have already answered as part of your presentation, but still there are some queries coming in. There's one which I'm picking up from here that, of course, one point which you have said, the finances are not going to be only the banks, there will be non-bank entities also. They are not necessarily going to be the Indian banks. There can be other players also who will be coming
Yes,
in.
absolutely.
I hope I'm right in that. And
Yes,
one thing more over here is that in case of export invoice financing explained by you, the financer is not necessarily going to be resident. It can be resident or non-resident both.
yes,
And
absolutely.
it can be preference, of course, for the non-recourse basis, but they can be recourse based also if
Yes,
clients are okay with that.
yes.
All right, right. And one thing which is there, will there be what happens in case of default by the buyer? The financer, because he has already done the without recourse, obviously they have to settle it with the buyers over there, and it's either if they don't have the protection already under the credit insurance or other sources.
Correct. So primarily, when we look at financiers, they will take a credit insurance or a credit protection in some way or the other, unless they have a direct line with the buyer, which will kind of secure their position in case there is a eventuality or a default. So either it is a credit protection or they have existing comfort with the buyer. So either way, the financier will kind of secure the position anyways.
Right. So all the due diligence, etc., whatever needs to be done, there's the financer's responsibility. They will have to take care of it, based on which they set up the limit and then they offer
Yes.
the price.
The risk has to be taken by the financier. The due diligence also has to be in satisfaction with the financier's existing framework. The platform additionally will be doing all the necessary due diligence that the platform is required to do as per the ITFS framework, which includes KYC, screening of sanctions, AML, and so on and so forth, and also basic due diligence in terms of establishing a legitimate trade that is happening between the counterparties.
All right. Just Ketan sir, just one thing. We are already talking about 25,000 crore, 50,000 crore, $8 billion for the own domestic business over here. Over here, if I may ask you a number, basically, what are you thinking by the end of 2024?
Sir, just to give a perspective, when Trends platform got started, so we never had numbers in our mind. So to be very clear that what we have set ourselves is basically 150 to 200 million dollars target till March 2024 to be realistic. But what we have seen is the interest which is coming from the corporates is very huge. But at the same time, we want to develop the platform. The platform is already developed, but it's going to be stability of the platform, how the platform works, because this kind of a platform has not been attempted anywhere in the world. And this is the first step and I feel that look, this platform is going to be much bigger than the domestic platform also. So this year, what we have said is very clearly a very modest target of $200 million, and which you see that looking at the way the financiers, not the Indian banks, but the international financiers are very keen that this number can be easily crossed. The next year, we are saying that from $200 million up to 2024 March, the next year we are saying we'll be doing $1.5 billion.
Great.
The
And one last
2024
thing,
25 will be $1.5 billion, and it will be much more. Then once the platform is stabilized and we've got all the requisite parties on the platform and how it is working, then the sky's the limit.
that's right. Once it takes off, basically, then it can be just a multiplier every year sort of thing.
Correct.
Then one last thing, Indrajit has already mentioned that there is already blockchain settlement happening in the gift city for the dollars, etc. Another aspect which is has been a bone of contention between regulators and MSMEs also is about the conversion rate what they get over here. Any thoughts, any possibility of linking this to some similar platform where they get better, more transparent, fair pricing for the exchange conversion, something like FX retail or anything like that?
So, we are working with JP Morgan, at least for the part of the settlement part. But there are this will be left at the left at the option of the exporter. So tomorrow there is a possibility that we also tied up with certain platforms which can give the transparency to the rate for the rates also, like an FX retail what you're talking about. So that
Right.
will be something, it will be a margin which is decided over interbank or whatever the margin is. That is a margin which will come over there. So we see that the more digital it happens, the more digital the transactions happen, the more transparency will come in. And that's where the digital platforms come into the being, because there's no manual intervention. Is the machine which will decide, is the the set parameters will decide the whole transaction flow and the margins also. So we feel that the end of the day, the MSMEs will end up saving at least 1.5% to 2% on the cost as well as the FX front, which today the banks or the digital platforms which are doing transactions to the limited front, they end up making 4 to 5% margin. So once these platforms come into being, I think that reduction of the margin will be to the tune of 1.5 to 2% to start with.
This is something which is going to shrink the overall financing cycle. That itself is a big saving. And second part, making the pricing, the financing cost much lower, and also if it can bring in the exchange thing also, I think 1.5 to 2% looks very conservative. The saving can be much more than that overall, I believe. So I think thanks a lot, Indrajit, for your detailed presentation. Whatever the questions I'm seeing, I can see most of the questions we have already answered over there. And with this, if unless you have got something more to add, we'll close it here. And what I will request you is, sir, if it's okay with you, the presentation can we share with the people if anybody is interested in that?
Yes, sir. We can do that.
All right.
Yes.
Thank you very much.
Just wanted to understand that this entire conversation was helpful for the bankers. I can see the fantastic participation. It had gone to almost 122 plus.
That's right. That's right. So it's normally our number is around 80 to 100. This is one of the few occasions where we have crossed 100 for this thing. That of course talks about a lot about the interest people have got and the curiosity they have got. And thanks a lot for your very elaborate presentation and taking time off to help and answer the queries also. Thank you, and thanks to all the participants for sparing time and joining us today for this wonderful presentation. Thanks a lot, sir. We would like to have many more sessions like that going forward.
Thank you, sir, and thanks for calling us. It's been a pleasure to come and talk, especially to FEDI and the team, because all said and done, we've been working with FEDI for a long time. From our career days of trade finance.
That's true. That's true.
So, thanks a lot, sir.
Thank you once again, sir. Thanks.
Thank you.
Thanks, Indrajit.
Thank you.